Meet Corporate Monkey. He runs a highly profitable business and gets very rich. But now he owes a large amount of money to the government in taxes. Corporate Monkey is not happy. He does not remember the government working his 12-hour shifts. But Corporate Monkey has a plan. Through an old acquaintance, he gets connected to Lawyer Monkey. Together, they decide to explore a very creative solution: investing in fine art. Here is how it works. Corporate Monkey finds a struggling artist monkey who paints bananas on skateboards. Nobody buys them. The artist is broke and discouraged, but Lawyer Monkey sees an opportunity. Corporate Monkey pays the artist to create something new. The artist happily produces a modern masterpiece. Corporate Monkey buys it for $100. Then Lawyer Monkey calls in a favor from art appraiser Monkey, who visits, examines the piece, and declares it worth $5 million. Next, Corporate Monkey donates the painting to a charity art gallery. Because of his generosity, he gets to write off the full appraised value as a tax deduction. Instead of paying taxes on his profits, he receives a massive tax break, often far more than he originally paid for the artwork. He never sold the painting. He did not even like it. He simply inflated the value of a worthless object and used it to avoid paying what he legally owed. This is tax evasion. Tax evasion is when someone deliberately avoids paying taxes they are legally required to pay. This is different from tax avoidance, which uses legal loopholes to reduce a tax bill. Evasion crosses the legal line. Fine art is one of the most popular tools for this scheme because artistic value is entirely subjective. There is no fixed price for a painting. That makes it extremely easy to manipulate. And it gets worse. These tactics are used in the real world. In many countries, tax authorities allow deductions for donated artwork based on fair market value, even when that value is wildly exaggerated. While safeguards exist, such as qualified appraisals and holding periods, wealthy individuals are extremely skilled at working around them. Some hire appraisers they know will provide inflated valuations. Some donate to charities they personally control. Some channel artwork through shell companies to obscure ownership. The result is always the same. The public treasury loses billions every year, while the wealthiest individuals pay far less than everyone else. This also damages the art world itself. When fine art becomes a financial instrument, the actual value of creative work collapses. It no longer matters whether a painting is beautiful, meaningful, or skillfully made. What matters is whether an appraiser will sign off on an inflated number, and whether the paperwork holds up. Real artists, those who spent years developing their craft, get pushed aside by low-quality pieces that exist purely as tax strategies. Art stops being expression and becomes an industry built entirely on loopholes. But genuine creativity still exists. There are artists who create because it means something to them, not because it reduces a tax bill. Supporting those artists matters. Buy art because it moves you, challenges you, or simply belongs on your wall. The next time you see a single object mounted on a blank canvas being valued at millions, you are probably not looking at art. You are looking at a financial strategy in disguise. This video is purely educational and explains how tax evasion can occur through the fine art market. It is not a guide, and it is not legal advice. Please do not attempt any of this.